Hi guys, welcome to the second portion of our tutorial session. Before we proceed to the short problems, let us first revisit some of the problems. So apologies for item number 13. I wasn't able to furnish you the correct answer, but for number 13, the correct answer would be letter D. Letters A, B, and C correspond to perpetual inventory system. It's only letter D which is the answer that refers to a periodic inventory system. Also, for number 20, I have to correct what I said. So, initially, when you receive money, your entry would be debit cash in bank, credit AR. But then when you receive the notice that the check has no sufficient fund, you reverse the entry. The reversing entry would be, or the correcting entry would be, debit AR and credit cash in bank. And then once your customer gives you another check, no, which is now sufficient, you now record the normal collection process: debit CIB or cash in bank, credit accounts receivable. So I hope that's clear. So again, when you first received the check, you debited cash, credited AR. When you knew that it was non-sufficient, you debited AR and credit cash in bank. Then you ask your customer to furnish you another check, and then your customer gave you another check. Your entry would be debit cash in bank, credit AR. So let us now proceed to our short problem. So we have actually 20 short problems here. So let's try to finish this. So for number one, using the following data, compute the total cash spent for inventory in 2020. So for this item, it just requires your analysis of different accounts, particularly your accounts payable and inventory. So if you can imagine your T account, imagine it. But for the purpose of presentation, let's do the formula method. So you're given that your inventory beginning on January 1, 2020 amount to 300,000 pesos, and then your ending inventory was 200,000. If you're if that's the case and your CGS amounts to 900,000, then if you work backwards, you'll get your purchases amounting to 800,000 pesos. That is your cost of goods sold minus inventory beginning plus inventory end. Because the buyer equation is that inventory beginning plus purchases minus inventory ending is equal to your CGS. Therefore, for you to get your purchases, you deduct inventory beginning from your CGS, and then you add inventory ending. By following this formula, you'll get your purchases amounting to 800,000 pesos. So that purchases pertain to your current no purchases. So it will affect your accounts payable. So your beginning accounts payable as given by the problem was 200,000 pesos, and then as mentioned, your purchases amounted to 800,000 pesos. If your ending accounts payable was 240,000, it means that you paid 760,000 pesos. Why? Because for you to get payments, the equation that you'll use is that um, accounts payable beginning plus purchases minus accounts payable ending. That would amount to your payments. So for number one, the answer would be 760,000 pesos. So for this number, no, the important skill that you have just to determine would be the interrelatedness of accounts and the use of a T account. The utilization of the account is very much important, even when you go to more difficult accounting subjects. Having a T account lets you or allows you to um, understand more the given problem. So for number two, here's the problem. So this guy, the owner of the well-established ENR company, suspects that some inventory may have been taken by her new employee during 2020. the following pieces of information are available. So there's inventory beginning, purchases, sales, and sales return. A physical inventory taken on December 31, 2020 resulted in an ending inventory of 275,500. ENR company's gross profit rate remained constant at 25% in recent years. Using the information given, what is the estimated cost of the missing inventory? Before we go straight ahead to the problem, let me first discuss you some important concepts. So, um, this problem highlights the gross profit method. We actually have two methods in estimating inventory: the gross profit method and the retail inventory method. So this problem eh, um, constitutes the utilization of the GP or the gross profit method. So just some concepts to to remember. If it's sales return, you consider it in the analysis because again, sales return, as mentioned in the previous video, um, involves the actual return of the inventory. Sales allowance and sales discount, on the other hand, don't consider or don't involve the actual return of inventory. Rather, they represent deductions of amount due. So, and therefore, as far as GP method is concerned, you simply ignore sales allowance and sales discount. However, should the problem give you the term sales return and allowances, you consider it. Also, it's important to note the difference between the gross profit rate based on sales and gross profit rate based on cost. So, if it's gross profit rate based on sales at 60%, meaning that your GP is 60% and it is based on sales. So, your base is always 100%. If it's based on sales, therefore your sales is 100%. Consequently, 100% minus 60% would be 40%. That would be your COGS. On the other hand, when we see that gross profit rate based on cost is 60%, it means that again our GP 60%, but then our basis here is cost because it is based on cost. Therefore, our CGS would amount to 100% and our sales would be 160%. I hope that's clear. So now we're given different information. So for us to solve this problem, you must first determine our estimated CGS. So how do we determine our estimated CGS or estimated cost of goods sold? We must first take into account our net sales. So how do we compute net sales? It's sales 1,850,000 less sales return amounting to 150,000. Therefore, our net sales is 1,700,000 pesos. Again, if the problem gives you sales discount or sales allowance, ignore that for the purposes of using the GP method. You only consider sales return or sales return and allowances. So given that your net sales is 1,700,000 and your gross profit rate is 25%, meaning this net sales amount to 100%, therefore your CGS is 100% minus 25%, 75%, which is why for our formula, it is just 1,700,000 times 75%. Now, we have a estimated cost of goods sold of 1,275,000. We have your cost of goods available for sale. We get that by adding your inventory beginning and your purchases. That's 350,000 pesos plus 1,250,000 pesos. And then if we deduct the estimated CGS, we will get the should be ending inventory amounting to 325,000. Basically, that's the difference between your cost of goods available for sale and the estimated cost of goods sold. Now, upon counting, the company only was able to retrieve actual ending inventory amounting to 275,500. But then your record says that you should have 325,000 of inventory. Therefore, the discrepancy between the two represents the estimated missing inventory. Again, this is just an estimated account because for this problem, we're using the GP method or the retail inventory method in order to determine the estimated end inventory. So the answer for this problem is 49,500 pesos. Um, Number three, the question is, what is the correct amount of inventory? So it just requires you analysis. Actually, this problem, I think, was lifted from a book. It looks familiar. So Pengeng Uno Company provided the following data. Okay. So items counted in the bodega. So when the inventory count was held, they counted inventory amounting to 4,250,000 pesos. And then, so let's go to the actual solution. Okay. So you counted inventory amounting to 4,250,000 pesos. And then there were items in the receiving department returned by customer in good units. Is this inventory? Yes, 150,000 pesos because they are in the receiving department and they are in good condition. How about items ordered and in the receiving department? Do we consider that? Yes, we consider that because it's already on hand. How about items ordered, invoice received, but goods not received? Freight is on the account of whom? It's on the account of the seller. If it's on the account of the seller, if the freight is on the account of the seller, it means that the freight term is FOB destination. If that's the case, if that is the case, then goods in transit would not be inventory as far as the customer is concerned. So for this purpose or for this problem, we simply ignore the 300,000 pesos. We don't deduct it from 4,250,000. We just ignore it. Why? Because when you determine the 4,250,000 pesos, you didn't include the 300,000 pesos. Diba? So the treatment here is for you to ignore the 300,000 pesos. Wag mo lang isama sa 300,000. Sinama mo ba yung 300,000 sa 4,250,000? No. So kung hindi mo siya sinama, wala ka nang gagawin sa kanya. But if you consider the 300,000 pesos in this amount, then you have to deduct. But for this problem, you didn't include the 300,000 sa 4,250,000 pesos. So you simply ignore it. How about item shipped today, invoice mailed, FOB shipping point? Sa'yo pa rin ba yan? No, hindi na. So, hindi mo na siya inventory. How about item shipped today, invoice mailed, FOB destination? Sa'yo pa rin ba yan? Yes, sa'yo pa. So, kung sa'yo pa, dapat inventory pa siya. Question, ito bang 150,000 pesos nasama mo siya sa 4,250,000 pesos? No. Kasi nga, in transit siya. So, nung nagbilang ka sa bodega, hindi siya kasama sa nabilang mo. But the question is, do we consider that as your inventory? Yes. So, for the purpose of computation, you add 150,000 pesos. Kasi nga, hindi mo siya nasama. Pero dapat kasama siya. Items currently being used for window displays, of course, inventoriable. Items on counter for sale, of course, inventoriable. Items included in count, damaged and unsaleable. Technically, the cost of that would be 50,000 pesos. So your total cost would be 4,250,000 pesos plus 150,000 pesos plus 350,000 pesos plus 150,000 pesos plus 200,000 pesos plus 850,000 pesos plus 50,000 pesos. That's 5,900,000 pesos. That's 5,900,000 pesos. Actually, this 5,900,000 pesos represents your NRV. But in reality, the cost of your inventory is not 5,900,000 pesos. It is actually 5,950,000 pesos. And the difference refers to this one, 50,000 pesos. Because if your cost is 5,950,000 and this one is damaged or unsaleable, it goes to say that the NRB of this item is 0. And therefore, if you get the lower of cost in NRV, you'll determine that your NRV is actually 5,900,000. That's 5,950,000 minus 50. But the problem is asking for the what is the correct amount of inventory. It's actually asking for the carrying amount of inventory. So we use the rule lower of cost in NRV. In this case, the lower amount is the NRV. Therefore, our answer would be 5,900,000 pesos. I hope that's clear. For number four, if the FIFO, the question is, if the FIFO cost flow method is used, what is the cost of inventory on April 30? So the technique for FIFO is just just determine the number of units on hand because it's asking for the cost of the inventory. You just determine the number of units on hand on April 30 and you just determine the amount. So how do we do this? The number of units available for sale is 23,700. How did we compute for that? That would be your beginning balance of 10,000 plus purchases of 3,500 plus purchases of 11,000 minus purchase return of 800. So you look at the units. It amounts to 23,700. And then you were able to sell how many units? 18,700. How did we compute for that? That's the 12,000 sale plus 7,000 sale minus 300 sales return. Therefore, the units available for sale minus the number of units sold would be equal to the number of units remaining, and this amount would refer to your ending inventory. So when you check your ending inventory consists of 5,000 units. But since you're using the first in, first out, unang pumasok, unang nabenta. Therefore, yung hindi mo nabenta, it refers to your last purchases. So we just attribute the 5,000, no? And the 5,000 unit, it appears that the 5,000 unit represents your 5,000 units of ending inventory, matitrace mo siya dun sa purchase ng nung March 5, no? Because dito siya manggagaling kasi nga ito yung last purchase mo, 5,000. And what's the unit cost? 73 peso and 50 centavos. So you just multiply 5,000 by 73 peso and 50 centavos for you to get the cost of ending inventory. That amounts to 367,500. So that's the answer for this problem. For number five, just a correction. The question should have been, it was discovered later on that the 2019 not 2020 2019 beginning inventory was understated by 3,000 while the ending inventory for the same year was overstated by 5,000. What is the correct cost of goods sold for the year 2020? So let us just first do the long cut, no? We're asking for the corrected cost of goods sold for the year 2019. So let us first compute the corrected beginning inventory. So based on your record, the beginning inventory in 2019 was 37,000. But again, the problem says that it was understated. So you add 3,000 for you to get the adjusted beginning inventory of 40,000. And then your purchases amounted to 173,000 pesos. You add the two, you get 213,000. That represents your cost of good available for sale. Now, for ending inventory, the record says that your ending inventory amounted to 44,000. But then upon audit, it was discovered that it was overstated by 5,000. So we deduct 5,000 from your ending inventory per records. Therefore, the adjusted ending inventory or the corrected ending inventory is 39,000. By virtue of the formula I presented to you, the big cost of goods available for sale minus ending inventory, that would represent your cost of goods sold. So therefore, the corrected cost of goods sold is 174,000, and that is our answer. So how do we do the shortcut? You first get the unadjusted CGS. It's 166,000. Correction na, if you do the footing, meaning if you add 37 plus 173, it should not be 205. It's like 210, which is why if you deduct 44,000, the cost of goods sold per record should be 166. So I think that's a typographical error. So the cost of goods sold unadjusted should be 166,000 pesos, and then the problem says that the beginning inventory is understated. Again, your beginning inventory affects your equity. If your beginning inventory is understated, meaning the cost of goods sold is also understated. So we add 3,000. Next, your ending inventory is overstated. If your ending inventory is overstated, it means that your assets are overstated. For the accounting equation to balance out, it means that or implies that your equity is also overstated. If your equity is overstated, it means that your net income is overstated or the CGS is understated, which is why we add also 5,000 pesos because the CGS is understated. So 166,000 plus 3,000 plus 5,000, that also amounts to 174,000 pesos. So it just re-emphasizes or it just emphasizes the theoretical concept that we discussed in video 1. Number 6, using the same information from the previous item, determine whether the 2020 cost of goods sold is understated or overstated and by how much. No? So how do we compute for that? The problem says that the ending inventory, the 2019 ending inventory was overstated by 5,000. Now, your ending inventory in 2019 becomes your beginning inventory in 2020. If your beginning inventory in 2020 was overstated by 5,000, therefore, your cost of goods sold is also overstated by 5,000, right? Because your beginning inventory is 5,000. What happens in your ending inventory before is rolled forward, is is carried over to the next period, such that if your ending inventory in 2019 again was overstated by 5,000, it also goes to say that your beginning inventory in 2020 was overstated by 5,000. Again, if your beginning inventory is overstated, your equity is understated because your cost of goods sold is overstated by 5,000 pesos. So I think for this problem, the um the the answer should be 5,000 overstated. Sorry, this should be 5,000 overstated. 5,000 overstated. Again, the problem is asking for using the same information from the previous item, determine whether the 2020 cost of goods sold is understated or overstated. Again, the CGS, based on our analysis, is overstated by 5,000. And this overstatement emanates from the overstatement or your beginning inventory. The problem didn't mention that the ending inventory in 2020 was um, wrong. So we assume that it was correct. So yung namali lang sa 2020 was the beginning inventory, which was overstated by 5,000, and consequently the CGS was overstated also by 5,000 pesos. Disclaimer for number 7, again, this should be emphasized in Module 3 because it refers to your accounts receivable. So using the following data, compute the total cash collected from customers during 2020, assuming that all sales are made an account. Okay. So you're given the gross profit rate of 20%. If the problem is silent, you assume that the gross profit rate is based on sales. Therefore, if your gross profit rate is 20% and your sales revenue, and it's based on sales, therefore your sales revenue is 100%, your CGS is 80%. If your CGS, if your gross profit rather is 20%, for you to get your sales revenue, you just simply divide, you just uh, you just simply divide this by Okay. So for if your gross profit was 337,500 and it amount and corresponds to 20%, for you to get the 100%, you simply divide this by 20%, right? No. And if that's the case, for you to get the CGS of 80%, you multiply your sales by 80%. Okay? So that amounts to 1,350,000 pesos. But then the problem is asking for the amount of collection. So what's the relevant figure here? The relevant figure here is actually your sales revenue, which based on the problem are assumed to be made on account, meaning walang cash sale, lahat on credit. So if your beginning accounts receivable is 530,000 and your sales is 1,687,500, and at the end of the period your AR na lang is 270,000, therefore yung 1,947,500 yun yung na-collect mo. So how do we compute for the cash collections? Is actually AR beginning plus credit sales minus AR ending. If you do your T account, it's the same banana. It's just that for this, for the purpose of presenting this, I just use the formula approach. But if you do the T account, you'll realize that indeed the cash collection amounted to 1,947,500. So what's the entry? If you do the sale on account again, it's debit sales, credit sale, a debit AR, credit sales, and once you collect it, you debit cash and credit accounts receivable. For number 8, I think this is a perpetual inventory system, much uh, quite difficult compared to periodic inventory system. So for number 8, we're asked to do the cost of good to get the cost of goods sold during the using the moving average cost method. And for number 9, we're asked to compute for the gross profit for the month. So how do we compute for the cost of goods sold? So we're actually given the following figure. So you have your beginning inventory and we're actually given the number of units and the corresponding unit cost or selling price. So if you get yung beginning inventory mo 50 pesos, you multiply it by the unit cost, you get this amount, 750 pesos. Tapos ganun din yung process for your purchase. You add the two, you add this two amount, you get 2,450. And then this 2,450 pesos, ilang units siya? 150 units. So for you to get the unit cost, you just simply divide 2,450 by 150. So at this point, your uh, weighted average or moving average unit cost amounts to 16 pesos and 33 centavos. And then you sold 80 units at 30 pesos, and then there was a sales return of 10 pesos amounting to 30 pesos again. So you just multiply the figures to get the 2, 4, and the 3, 300. Now, how did we compute 1,306 and 67 centavos? Now, there was no purchase. Therefore, our unit cost should be the same. It's 16 pesos 33 centavos. But then nag-iba na yung number of units natin. From 150, we deduct 80 and we add 10 kasi yung 10 binalik. Therefore, 150 minus 80 plus 10, that's 80 pesos. You multiply it by the moving average unit cost, which should not change because wala namang nangyaring purchase or purchase return. So ganun pa rin yung moving average unit cost. Multiply the two, you get the accumulated figure of 1,306 pesos and 67 centavos. Now, you purchase another 30 units amounting to 21 pesos, and then there's a purchase return of 5 minutes amounting to 21 pesos. Now, whenever there was a purchase return, dapat yung unit cost niya kung magkano mo siya binili. So for this item, it is assumed that this 5 units refers to your purchase on September 16. Binili mo yung inventory, yung purchase mo nung September 16 amounts to 21 peso. So yung binalik mo 21 peso din. So you just get the amount, multiply, and we have this following figure. So how did we compute for this? Ito naman, ano, kinompute natin siya by adding, 'di ba, ito yung kaninang balance mo, 1,306 pesos and 67 pesos plus 630 plus 630 minus 105. We get this amount. And then, how many units ka na? Kanina 80 ka, bumili ka ng 30 units, and then you return the 5 units, therefore 105 units ka. So what's the moving average unit cost? 17 pesos and 44 centavos. Notice that whenever there's a purchase or purchase return, your moving average unit cost changes. But if there's only a sales or sales return, like in this example, your unit cost should not change. Again, under the moving average unit cost, your unit cost should only change when there's a purchase or purchase return. And again, there was a sale amounting to there was a sale for 90 units of your inventory at 28 peso each. So you have a sales of 2,520. So how do we compute for the CGS? It's just actually determine the number of units that you sold and then you multiply it by the corresponding moving average unit cost. So for this one, you sold 80 pesos and there was a sales return amounting to 10 units. So 80 units minus 10 units, that's 70 units, multiplied by the moving average unit cost immediately prior the sale. So immediately prior the sale, your unit cost was 16 pesos and 33 centavos. So you multiply that. Plus, there was again a sale of 90 units. You multiply that by the moving average unit cost immediately before the sale. That's 17 pesos and 44 centavos. Therefore, your COGS is 2,713.33. How do we compute for CGS? Just sales minus CGS. We're done with the CGS. The problem is sales revenue. So ito mas madali ito ng sales revenue, di ba? It's 80 is actually 24 minus 300 plus 2520. Again, it's 24 minus 300 kasi nagkaroon ng sales return plus sale of 2,520. So you get 4,620. Sales minus CGS is your gross profit. Therefore, for this item, our CGS is 1,906 pesos and 67 centavos. So we're done with inventory. We have, I think, remaining 20 items for cash. So let's start by discussing problem number 10. So the problem is asking for the amount of replenishment. So on the same day, the company wrote a check to replenish the fund. What is the amount of the replenishment check? So on December 1, 2020, Eyes on Me Corporation established an impress petty cash fund of 14,000. So there's a petty cash fund amounting to 14,000. By writing a check drawn again its general checking account. So what's the entry for that? You debit petty cash fund, credit cash in bank amounting to 14,000 pesos. On December 31, the fund contained the following May currency and coins ka na 3,500. And the following items as projected on screen. So in determining the amount of replenishment, you just get the difference between your petty cash fund balance and the currency and coins na discover mo dun sa fund. So in this example, yung petty cash fund mo is 14,000. Yung currency and coins na lang is 3,500. Therefore, the amount of the replenishment should be 10,500. So that's the answer. What if the problem asks you to get the amount of shortage or overage? So how do you get that? So your PCF is 14,000. There was the receipts amounted to 49. That's the sum of 2 and 2.5. No? Meaning yun yung nagastos mo 49. Yun yung nagastos mo 49. Sorry, 22 plus 25 plus 200. That's receipts for your miscellaneous expenses, office supplies, and transportation. That amounts to 4,900. Itong envelope containing contribution of employees 1,000 pesos. You just simply ignore it. Why? Because yung itong 1,000 na to, hindi to nasama dun sa 14,000 kasi envelope containing contribution of employees. Parang napasama lang yan sa petty cash fund. The question is, andun sa yung pera ba na contribution of employees andun siya sa envelope? Yes. So kung andun siya sa envelope, wala siya dun sa 14,000. So we simply ignore it. Later on, I'll discuss kung paano kung wala na siya dun sa envelope. So petty cash fund 14,000 minus the receipts of 49. Your currencies and coins should be 9,100. But then nung nakita mo 3,500 na lang. Therefore, there's a cash shortage amounting to 5,600. So the entry to replenish the check would be debit various expense 4,900. This your receipts, and your debit cash shortage or overage amounting to 5,600, and you credit cash in bank amounting to 10,500 pesos. So paano kung yung 1,000 na yon nagkasama siya dun sa 14,000? Meaning tinignan mo yung envelope, walang laman ng envelope, pero dapat may laman ng envelope. Kung may laman yung envelope, kung wala nang laman yung envelope, the presumption is anong kasama siya dun sa 14,000 pesos. So what we can do here is we deduct 1,000 here. We deduct 1,000 here from the 3,500. Kasi itong 3,500 na nakita mo sa fund, may 1,000 dyan na nanggaling sa contributions. So yung real currencies and coins mo talaga pertaining to the cash fund was 2,500. And the cash shortage would increase, no? From 5,600 kanina, naging 6,600 na siya. But I think that problem, no, will be discussed sa 114, yung nahalo yung envelope dun sa petty cash fund. But for this problem, it's sufficient to know that the replenishment check amounts to 10,500 pesos. Number 11, the question is, determine the amount to be reported as cash and cash equivalents o nasaan ng Pangulo's December 31, 2020 balance sheet. So let's just run through the different accounts. So if you have your checking account, 147,890, but then you have a negative balance sa checking account mo, I think the presumption here is that it belongs to the same bank, which is why you can offset them, right? Because same bank, so pwede mong i-offset. Kaya dinideduct natin. But if different bank, this one you present it as cash. Ito naman you present this as a current liability. In BA 99.2, you'll discuss current liability. But for now, same bank, so we can deduct. Money market account, that's cash. So we include that. 90-day certificate of deposit due February 28, 2021. Do we include it? Yes. It's a cash equivalent because you acquired it. 90-day certificate of deposit meaning sure ka na in-acquire mo siya 90 days before maturity. Kasi yung original maturity niya 90 days. So sure ka na in-acquire mo siya 90 days before maturity. So remember the 3-month rule. Pasok siya doon. So cash equivalent siya. How about treasury bill purchased October 1, 2018 amounting to maturing on February 28, 2021. So nung binili mo siya, hindi siya pasok doon sa 3-month rule, right? Kahit na kailan yung reporting date mo, December 31, 2020, kahit 2 months na lang siya before maturity, hindi pa rin siya cash equivalent kasi nung binili mo siya or nung nag-invest ka sa kanya, hindi siya nagko-comply sa 3-month rule. So for these purposes, we don't include that. We don't include that item sa cash and cash equivalents. So the answer here is just the 147,890 minus 22,000 plus 24,500 plus 40,000. And then the answer would be 190,390. Now, for this one, it's actually just a bank reconciliation. So, nilagay ko na siya dito, paano gawin yung bank reconciliation. It's asking for the adjusted cash balance. So, in any case, dapat nga as mentioned, di ba, yung adjusted cash balance mo per your book or your per accounting record should be equal to your adjusted cash balance per bank statement. So how do we compute for the cash balance for accounting records? So for this video, no, hindi na natin masyado emphasize yung logical reason because we already discussed this din sa first video natin. So yung bank service charge, of course, hindi mo pa siya na-deduct, so i-deduct mo. yung charge for printed checks delivered, yung charge for printed cash delivered, kailangan i-deduct mo siya kasi hindi pa siya na-deduct. Proceeds of a bank loan, this is a credit memo, so you add it. Note collection, a credit memo, so you add it. Non-sufficient fund check, it's a debit memo, so you deduct. So you end up with 31,872 pesos. For cash balance naman, per bank statement, it's 33,076. And then you have an outstanding check. What's the treatment? You deduct it from your cash balance per bank statement. For deposit in transit, what's the treatment? You add it 5,100. And then let's analyze the bank error. It says here the check number 114 paid to supplier was entered in the accounting records at 22 but was erroneously deducted by the bank at 14. Here, ang nagkamali ay si bank. Dapat ang dineduct niya 22, ang dineduct niya lang is 14. Ako para mas madali mo siyang ma-reconcile, i-reverse mo lang yung ginawa niya. 'Di ba nagdeduct siya ng 14? Ibalik mo muna yung 1/4 tsaka mo i-deduct yung 2/2. Kasi ano yung nangyari? Dapat ang dineduct 2/2 pero yung dineduct niya lang is 1/4. So para mas madaling analysis mo, para hindi ka mahirapan kung ima-minus 800 ko ba or i-add 800, i-reverse mo muna yung ginawa niyang mali. So ginawa niyang mali is the bank deducted 1/4. So you add it back. Tsaka mo i-minus yung tamang amount na 2,200. I hope that's clear. And then there's another bank error here. Stolen check lacking an authorized signature was deducted from the company's account by the bank. Error yun ng bank. Kasi technically, when you go to your law classes, kapag walang signature ni company, dapat hindi yan i-honor ng bank kasi kailangan may signature. So kapag binayaran niya yan, kahit walang signature, kasalanan niya yun. Fault yun ni bank. Kaya itong 1,000, we add it back, no? Dun sa amount. So for us to get 31,872, it's 33,076 minus 6,504 plus 51 plus 14 minus 22 plus 1,100. So for this item, we get 31,872. Now, for numbers 13 and 14. Number 13, what is the corrected cash balance on May 31, 2020? Number 14, what is the unadjusted cash balance per book and on May 31, 2020? Again, the reason why I'm suggesting that you use this format is that pahanapin ka man dyan ng any amount, you can do backward, how do you call this? Work backwards, no? So for this problem, you're given balance per bank 19,375. Tapos may deposit in transit daw. So what's the treatment? We added. And then your standing check, we deduct. Their bank error 220. Anong klaseng error to? Check erroneously deducted by bank from the company's account May 12. So dineduct ng bank, dapat hindi niya i-deduct. So i-add back mo. So we get the adjusted cash balance of 20,692. That's the answer for number 13. But for number 14, we're asked to give the unadjusted cash balance per book. So ito yung nahanap natin. So how do we compute for that? Now, alam mo na yung adjusted cash balance per bank mo is 20,692. Theoretically speaking, if that's the case, the adjusted cash balance per book should also be 2692. Now, you have your bank service charge of 50. For you to get the balance per book, you just simply add the two, right? It's 50 plus 2692. Kasi, to get the unadjusted cash balance per book, it's balance per book minus bank service charge. So, by virtue of transposition, the balance per book would be the adjusted cash balance per book plus the bank service charge. So, for this item, the balance per book should be 20,742 pesos. Sorry if we're quite fast because we already emphasized the most of the concepts underlying the accounting for this. So it's more of like we're just emphasizing the points. We're just applying the concepts. For number 15, The balance sheet of from Home Furniture as of December 31, 2020 shows cash and cash equivalents of 25,000. It was found to include the following items. So what's the correct amount of cash and cash equivalent? So the cash and cash equivalent balance daw is 25,000. Tapos etong amount na daw na to na nakalista kasama sila doon, nasama sila sa 25,000. Let's check if dapat nasama ba talaga sila. Ito yung money order, nasama ba siya? Nasama ba cash and cash equivalent ba siya? Yes. So, what's the treatment? Ignore it. Kasi nga, nasama na siya dun sa cash and cash equivalent balance. So, tama lang na andun siya. So, wala tayong gagawin sa kanya. Note receivable. Hindi siya cash and cash equivalent, di ba? Pero nasama siya dun sa 25,000. So, we deduct it. The same is true for your receipts for cash advances and customers post-dated checks. Since hindi naman sila cash and cash equivalents, pero nasama sila sa 25,000, we deduct them from 25,000. Manager's check and cost currencies and coins, checks undelivered, PCF currency, cash and cash equivalent, nasama sila sa 25,000, which is correct naman. So wala tayong gagawin sa kanila. But then for your PCF, may expense receipt siya ng 940. Nasama siya doon sa 25,000. Pero expense na yan nagastos mo na siya. So dapat i-deduct mo, dapat hindi siya kasama. So we deduct it from your 25,000 balance. So for us to arrive at the correct answer, it's just 25,000 minus 75 minus 1,050 minus 24 plus 940 pesos. Anyways, if medyo mabilis, you can just rewatch the video if you want. Number 16, we're asked to get the correct cash balance. Okay. D6 checkbook balance on December 31, 2020 was 35,000. In addition, JetBlue Airlines held the, I think this should be JetBlue, no? So don't mind the D6. JetBlue Airlines held the following items in the safe of that day. First bullet point. 4,000 checked payable to JetBlue dated January 2, 2021. Oops, post-dated check kasi ang reporting mo December 31, 2020. So this is post-dated check. In payment of a sale made in December 2018. This was not included in December 31 check balance. First question. Cash ba siya? No. So dapat hindi siya kasama. Ito daw 4,000 na to, hindi siya kasama dun sa 28,000. Tama ba na hindi siya kasama? Yes. Kasi nga hindi siya cash. So wala tayong gagawin sa kanya kasi nga hindi siya nasama, which is correct. So wala tayong gagawing adjustment for this bullet point. For bullet point 2, the 7,500 check payable to JetBlue deposited in December 15 and was included in December 31 check balance. So ito daw 7,500 na to, kasama siya dun sa 35,000. However, the check was returned by the bank on December 30 and was stamped NSF. The check was deposited on January 2, 2021 and cleared on January 15, 2021. Ito daw 7,500, kasama siya sa 35,000. Pero non-sufficient fund siya. Check siya, 'di ba? NSF check siya because as of December 31, 2020, NSF check siya. Kailan ba lang siya na-redeposit and na-clear? Next year pa. So as of December 31, 2020, dapat hindi siya cash. Pero nasama siya sa balance. So we deduct 7,500. For bullet point number 3, 500 check drawn on JetBlue's account, payable to vendor, dated and recorded in JetBlue's books in December 31, but not mailed until January 10, 2020. Etong 500 pesos na daw to, na-deduct na siya sa balance mo. So etong 500 peso, na-deduct mo sa 35,000. Tama ba 'yon? No. Kasi nga hindi mo pa na-deliver yung or na-mail yung check, 'di ba? So kung hindi mo pa siya na-mail, dapat cash mo pa siya. Dapat hindi mo siya dineduct. Dineduct mo. So you add it back. So for us to get the answer of 28,000, it's simply 35,000 minus 7,500 and then plus 500. For number 17, this one, it's you're asked to get the cash balance after its first year of operation. This problem parang mas nagko-correspond siya dun sa statement of cash flows, di ba? You have different statement of financial statements. You have your statement of financial position, income statement, changes in owner's equity, cash flows notes. Ito, it refers to your statement of cash flows, which will be discussed further in BA 99.2. But since andito na siya, i-discuss na natin. So how do we get the cash balance? So you have your sales of 3.5 but 90% lang daw yung na-collect. So magkano yung cash na nakuha niya? It's 3.5 multiplied by 90,000 is 3,150. And then there was a disbursement for costs and expenses. So disbursement outflow, so we deduct. Disbursement for income taxes, again outflow of cash, so we deduct. How about purchases of fixed asset through the issuance of note payable? May involved ba yan dyan na cash? None. So, well, hindi natin siya papakialaman kasi the entry to record the transaction was to debit PPE and credit notes payable. So, there was no cash involved. The same is true for depreciation, diba? You just debit depreciation expense, credit act debt. So, no cash involved. Proceeds from issuance of ordinary share. Itong ordinary share transaction na to, i-discuss to sa BE 99.2. But simply, there's a proceeds, no? So, nakatanggap ka ng cash. So, plus 450. The same is true for your proceeds from short-term borrowing. So, nangutang ka. Payment, of course, on short-term borrowing, deduction siya sa cash mo. So, you have your cash balance of 179. Number 18. The petty cash general account has an interest balance of 75,000. The amount of petty cash fund that should be shown on the balance sheet as of September 30, 2020. So, ang tinatanong lang naman sa atin dito, yung amount of petty cash fund na i-represent natin sa financial statement, specifically the balance sheet. Again, yung katulad ng nasabi ko kanina, you just determine the currency and coins, tapos kung ano lang yung balance na yun, yun yung petty cash fund. So you have your currency amounting to 23,000, your coins amounting to 4,000. Pero may kasama pa diyang isa. Itong a check drawn by the company payable to the order of Joe Babe, petty cash custodian, 20,000. It actually forms part of her petty cash. Why? Because we call it a replenishment check. Kasi nag-issue daw yung check, nag-issue ng check yung company, tas payable siya kanina. Payable siya sa petty cash custodian. So, para siyang nire-replenish niya yung petty cash fund. So, yung entry dyan, di ba, you debit, for example, expenses, tapos you credit cash in bank. Yun, nag-i-issue ka ng check. Nababawasan nga yung cash in bank mo, pero nagiging mas mataas naman yung petty cash fund mo. So, 23 plus 4 plus 20, 47,000. Again, this one is a replenishment check. So, nire-replenish mo yung petty cash fund mo. So, in effect, ilan na talaga yung cash, yung balance ng PCF mo? May currencies ka, may coins ka, tas may check ka. 47,000 pesos. We're down to our last two items. So it's still petty cash fund. For number 19, determine the amount of cash overage or shortage. And number 20, if no replenishment was required on December 31, 2020, determine the correct balance of the petty cash fund on that date. So the problem says that the petty cash fund of the company partnership contains the following record on December 31, 2020. So your coins and currency, 480, an IOU, when IOU meaning I owe you, may utang ako sa'yo. So it's actually a receivable from an employee for cash advance 70, and you have the following vouchers. The general ledger account of petty cash has an interest balance of 4,000. So meron ka daw meron kang PCF na 4,000. Tapos sa 4,000 na yun, saan mo nagamit yung 4,000? Meron kang IOU from Bruno. Ang ginawa kasi dyan, parang, di ba may petty cash fund ka amounting to 4,000? Parang nagbigay ka ng pera kay Bruno as an advance. You gave money to Bruno as an advance, so you deduct 710. And then, may cash vouchers ka, expenses ka na 212 plus 23 plus 144, that's 2656. Yung cash currencies and coins mo should be 634. Pero magkano lang yung coins in currency mo? 480, right? Therefore, may kulang na 154 kasi dapat 634 siya pero 480 na lang. So yung cash shortage mo 154. So that's the answer for uh number 19. So for number 20, if no replenishment was requested, walang replenishment na ginawa, magkano yung correct cash balance mo? Kung ano lang yung actual existing, no? Ano ba yung actual existing? 480. So that's the answer for number 20. You don't mind the 634 because this amount refers to the should be balance. Pero yung i-report naman mo naman talaga sa financial statement kung ano yung meron ka. Ano ba yung meron ka? Yun yung 480 na nakita mo dun sa fund. So that would be all for this module, and hope that I'll be able to clarify some of the concepts. Again, just a disclaimer: if ever I said something that was different or that's different from what you learned in class, you follow what was taught in class. And good luck on your um, module examination. Uh, and keep safe. So the problem lang naman for module 2 is just you must know how to account for things, and you must always read the question. That's all, and good luck on your exam and keep safe.